Good morning, folks, and welcome to Swing Trading Today. Let's start off with a bit of housekeeping. If I could ask you, if you watch us on social media, give me a like, follow, subscribe, share with a friend if you think they'll be interested in the commentary. I'm trying to build the following on social media. So I would ask if you could do that. Great, thank you. And if you're watching this, whatever platform you're watching it on, leave a comment. I'll definitely get back to you if you have a question, feedback, etc. If you're good at making videos and you can tell me how to deal with this lighting, I'm using a Logitech video camera, and now I can improve the lighting. I would appreciate it. I've been messing around, but no go. So that would be appreciated. So let's get to the charts this morning. We've had economic data that came out earlier today. The Bureau of Labor and Statistics, the U3 number, reported the unemployment rate to be 4%. I don't believe that number is an accurate read. I believe the more accurate number is the U6 number. That includes people who have dropped out of the workforce or who are working part-time yet seeking full-time work. The U3 number, that number, if you work part-time, you're considered fully employed under that number. And the average hourly earnings missed expectations. So if unemployment were truly at 4%, where is the pricing power of the employee? What happened to the laws of supply and demand, right? You would think that the employee would be able to demand more money with unemployment so low, but apparently not. I don't believe the number. I just simply don't believe it. The U6 number, probably more accurate. So let's get to the charts here. We have the S&P 500. Remember the other day we spoke about this breakout point failure. These are all 4-hour charts. Breakout point failure, and we came back down, retested support, and we have subsequently broken out yet again. We did so yesterday. Now what we're setting up for here is a potential bull flag setup. Now, this is a light volume trading week. I haven't done much this week. We took a couple of profitable trades off the table, and that's about it. I mean, I don't want to fight against the computers because what we're trading against here is not real. You know, what's going on right now probably won't carry through to Monday, and that's when the big boys come back from the Hamptons. So what we're looking at here on this 4-hour chart is a bull flag setup. It appears as though we just may continue to break out here. We did go positive earlier. We have since given back some of those gains. We have RSI, which is trending up higher. So we may go positive here. Thin volume, folks. You know, I just don't want to make a call. But the path of least resistance appears to be to the upside. Let's take a look at the NASDAQ. Slightly green. We are at resistance. Here is our line in the sand here. Let's call it the 7150 level. And this is like an ascending wedge formation, which is not my favorite formation. So what we're doing here, it appears as though what we're doing is we're building a base on the NASDAQ. We're building the right side of a cup, of a potential cup with handle formation. So it's early on in the game, and we'll never know until we finally break out whether or not it's going to be successful. If we break down below 7,100, in all probability, we're going to pull back and retest the lows of the week. Yeah, we're picking up some steam here on the NASDAQ. Now, what I want to talk about is gold. Gold is down slightly this morning. Now, what I'm looking at here is a very, very strong consolidation. We broke out on this 4-hour chart back here on the 3rd, and we've been consolidating and even retesting prior support. And it appears as though we are going to move higher here. Now, anybody who's watched me for any length of time knows that if I'm talking about gold, I'm looking at the dollar. You must, right? So one would think that intuitively that the US dollar would rally on the strong, so-called strong economic data released this morning. And gold should suffer with a stronger US dollar. So let's take a look and see how intuition worked out. Not too good, right? The dollar's weak and getting weaker. So much for the jobs data helping out. Is it the fact that the markets, or the currency markets anyway, didn't get thrown a life preserver, meaning the trade wars were not averted? Perhaps. But the dollar is weak, and it appears as though it is getting weaker. We definitely have a downtrend which has begun. Now, what we don't have here is a rally back to a lower high, right? So I always say to members that the chopping process is just that. It's a process. Rarely do stocks, commodities, currencies, the price of a cup of sugar simply go straight down. Unless, of course, there's a geopolitical event, terrorism, a volcano blowing up somewhere, earthquake, whatever the case may be, right? Rarely does that happen. So more than likely, as we test these support levels, we're going to get a rally back on the dollar. Do we take out prior highs? We won't know until we fail or we break out. So my answer is I don't know, and that's how honest you really need to be. You can anticipate what the probabilities are for the market, but don't buy into your own BS of opinion, because the market can really make you look foolish really quick, especially if you're making YouTube videos, all right, because they don't go away. So the dollar, weak this morning. So gold, as long as there's weakness on the dollar persists, should do well. It's down this morning. It's not benefiting from the pullback in the dollar. So that should be a bit of a concern. You could see here on RSI that we have a double bottom setup forming here and the potential for a W formation. So watch for a breakout on gold. I think we're breaking out fairly soon. I said it last week. I repeated it a couple of times this week. I think that what we need to be doing right now is positioning for building. We already have a position in the gold mining names and in silver. I'm looking to add more and to open up a position long of gold, which is now starting to pick back up again. But we're not going to buy it until we get a breakout. Members, more to come here on gold, okay? Let's talk about LABU, 4-hour chart, looking good here. So this is one where we may open up a position to the long side. They're popping it up this morning, but we're not going to be chasing LABU. That's not going to happen. But you could see here that we have rallied, broken out above resistance levels. Let's take our crayon out, connect the dots, extrapolate out, and at current, we've broken out above the upper band of resistance this morning in the pre-market, above the upper band of resistance. So again, I would not go chasing. I would look for a pullback and a retest. Let's watch and see whether or not LABU is going to be able to hold its mud. If it does, great. If it can't, well, then we look elsewhere, right? Other names that I'm looking at are Illumina, another biotech name. The symbol is ILMN. And you can see that these shares are doing well. Again, a 4-hour chart. Okay, so now Illumina at current, it's in the pre-market, very thin volume here. We're trading down below the lower band of support. I would ignore that. I would look to see how we open up. My guess is that we move up higher here this morning, especially with biotech looking good. So I'd expect that Illumina would follow suit. So I like Illumina. We may be getting long. Let's take a look at Grubhub. We'll leave off with Grubhub. Now Grubhub, let's go to a daily chart really quick here. We're consolidating . And you can see this line I just drew is acting as support yet again. This is why it's so critical to draw your trend lines, understand where support is. That way you can identify where you need to put your stop loss. Because if, suppose I buy Grubhub this morning, I know exactly where my stop's going to be. It's going to be right below this lower band of support, because I don't want to be long if it can't hold the support level, because what does that mean? It means that there are more sellers than buyers. The buyers are being overwhelmed, and you have to get out. You have to cut your losses. So Grubhub is looking good. Let's go to a 4-hour chart. Let's see how good. So I think the play here is to do what we normally do, and that is to identify resistance levels and to buy on strength. And you can see this morning that this secondary downtrend line, here's our primary downtrend line here. If we open up where we are at right now, we would have a breakout above the secondary downtrend line. Now, where I would really get excited is on a rally up and through the 115 level. That would be really good stuff. Because if you take a look at a weekly chart, that takes you within a new all-time high. And if you take a look at this weekly chart, it's really good to illustrate how multi-period charting works. We've already gone over the daily chart, we've gone over the 4-hour chart. Now we're looking at the higher level view. I always talk about this, that 30,000 foot view of the battlefield. And the things that you could divine from this chart is that you clearly have an uptrend. So check that box, because unless a stock is at extreme oversold levels, I don't want to buy it unless it's in an uptrend. Now, the price action over the past several weeks is quite good. We have been consolidating within a triangle formation, and we are beginning to break out. Now, why I don't trust this week's volume is because there's no volume, right? It's all computerized trading. So I don't trust the breakout here, assuming that we close where we are right now. So I would wait until Monday to see whether or not we get a new weekly high before I got aggressively long of Grubhub. And that's it for this morning, folks. Let me get this out to you. I don't think I'm going to be able to do it by the open, but I'll give it a shot. Have a profitable trading day. Members, I'll talk to you in the forum. See you there.